Hello and welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we are going to be taking a look at the analysis of the stock market and some of the Magnificent Seven stocks. Please comment below what you think of the state of the stock market today and how it might react to upcoming rate cuts. So let's start off with fear and greed. And on CNN, we are back into neutral from being into low greed not long ago. And pie vesting is still up in greed, was touching on the extreme greed areas and came down a little bit. So before we get into the S&P 500, something important to note is that during the month of September, the Fed is talking about cutting rates, and we tend to see a lot of volatility around the first rate cuts. And as you can see, depending on how things go with rate cuts, we can either, and on average, you can tell within a month or two whether the market is going to be going more or less up for a while or is going to get in a correction phase sooner than later. One of the ways to be able to determine or have an educated guess on which way it's going is how many basis points the Fed's going to cut. So if you're a bear and you want discounted prices sooner than later, you'd be looking for 50 basis point cuts, but otherwise 25 basis point cuts doesn't mean you're out of the woods, but at least in the near term, maybe around the next year or so, you can expect the stock market to still overall be healthy and going up. As far as crypto, I do videos every week on the Bitcoin rainbow chart, Bitcoin miners. So subscribe if you want to follow that. But crypto, Bitcoin, right now it is in fear. So possibly some opportunities in crypto with fear in that market. And if you are interested in crypto and some of the alts and miners, what's important to know is Bitcoin dominance. When it goes up, not so great for many of those assets. When it goes down, sometimes those can do better. And again, we talk about the rainbow chart, where we are in the Bitcoin cycle every week. Those videos usually come out Monday or Tuesday. But let's start off with the S&P 500 and zooming out. You can see that I had this trend line drawn from this peak that we hit all the way back in August of 22 and got above it a little bit, and now we've gone below that trend line. And right now, the S&P, you can see it didn't quite come down to the 50-day moving average. Got a little bit of a bounce off one of the 20 moving averages. I'm not sure if it's the EMA or the SMA, but if it does continue lower, then we would look at that 50 being support at around 54.90. But below that, we have the 100-day moving average at around 53.83. The VIX, which is the volatility measure of the markets. You can see we had a recent spike recently, well, a big one back here, but then another little spike is NVIDIA had another sell-off the other day. But overall, we haven't seen a spike in the VIX this big since the COVID crash and the great financial crisis. So I'm calling this a warning shot. I think that in the coming year, we can expect to see more VIX spikes coming up, and this is a precursor of things to come. And one of the reasons for that is the yield curve inversion. When the Fed raises rates, this is a real simplified way of talking about it. There's way more depth we could go into with this. But basically, when the Fed raises rates, we get an inversion of the yield curve like this. And when it uninverts, typically a year or so after, you can bet on there being a recession. And right now, it's just touching the uninversion line, just peeking its eyes above, but it isn't steadily uninverting. And you can take a look at times it uninverted or was inverted and uninverted later 2019. Of course, there's a 2020 COVID crash. People are thinking there's going to be possible recession then anyways. And of course, you can see this was before the great financial crisis and the dot-com bubble. So this is one of the longest times the yield curve's been inverted. I think they're saying since the Great Depression, something like that. So yeah, just be cautious in the long term if you are looking at investing. Now's the time to make a plan. So if any of these stocks we talk about go down 30, 40 to 60% or more, then you can look for some good long-term deals and set yourself up right now to be ready to pounce whenever that happens. And that's the thing. No one knows if it's going to happen sooner or later. When we see how much the Fed cuts by, we'll have a better idea. but now it's the time to start getting ready for that. You can see the unemployment rate still at above 3%. And as far as crypto or Bitcoin, we'll just take a quick look at. It's lost the 200-day moving average. It's going to the lower end of this channel. It looks like it has a sell signal, red candle. Usually these candles come in two or more. And right now there's the 50-week moving average and the lower end of the channel around 54. So I wouldn't be surprised if it hit 54. I don't think the sky's falling. And if Bitcoin even did get lower to around this 46K range, you can see there's price action here, the 100-week moving average. Just know that after the mid-cycle top in 2019, that's what happened then too. It got down to that light blue line. That's the 100-week moving average. I'm not saying it is going to get there, but anywhere that Bitcoin and altcoins are price-wise between here and there, I'm looking to dollar cost average in greater amounts as it gets deeper in value. Again, Bitcoin dominance, right now it's still climbing up. When it starts to tank, that's when crypto tends to do pretty good. So let's get into the Magnificent 7 stocks. And first, let's start off with NVIDIA. And you can see NVIDIA, it came down to the 20 moving averages. They're pretty close to each other there, and the 382. So before, when NVIDIA had that big correction, it came down to the 0.5, 618, even came back up, made a lower high, and the candle body is steadily on the 382. Let's zoom in on the daily. Let's get a better picture. So you can see it's even lower than the 382. This is part of the wick that we are seeing. It's holding on to the 100-day moving average and may get, who knows, maybe we'll just settle in here and get a higher low, lower high, higher low, start forming a little bit of a wedge, and then from those wedges it can break out either way. But if it is to go lower, the 0.5 is there at 103, and then we have the 618 fib here, as well as the 200-day moving average at 94. If it's 94, you really like NVIDIA, at least in the short, medium term, I think that'd be a great spot to look at. Last time it only got down to the 618, didn't quite hit the 200, and that's around 96. So you could even just target the 618 at $96. Again, maybe set a buy order and see maybe if it'll happen or not. And there's two ways I draw fibs, guys. If we are within recently ranging of all-time highs, I draw the fib. It's fib retracement from the low to the high, and then we calculate how much it retraces from the highs by these lower numbers, 236, 382 being from the top. But if it's a former all-time high that we're in range of, you'll see I'll have it drawn from the high to the low, if the former all-time high was a while ago, and then we look at price action in between. So that's why sometimes the fibs are swapped around like that. Just showing you guys how I do it, so in case you're wondering. So Microsoft, we have the fib drawn from the low to the high, and it's come down to the almost the 382. You can see Microsoft settling in on the 200. So possibly Microsoft forming a base here. Maybe it'll come down to the 382 again at around that 400 level. But it does, you can see it wasn't able to break through the 236 in the 50-day moving average. So there's some resistance right there between 420 to 425. And if it gets above there, then we're looking at the all-time high at around 469. So Microsoft possibly a play here. Let's take a look at the weekly, because yep, it's right near the 50-week moving average as well. So in my opinion, whenever an asset, crypto or stocks, is at or above the 50-week, it's still technically bullish. Now, because it goes under the 50-week and turns quote-unquote bearish doesn't mean that I'm going to ignore it. Here at Market Psychology, we talk about this. Bearish times, that's when I'm looking at picking up deals. And I have on this indicator, you see the green and red dots, that's for buy sell signals. If we turn bearish, there's another buy sell signal indicator that I turn on that I want to have confirmation. This indicator is more of a leading indicator. It shows it right there. But the lagging indicator that I like when things turn bearish is this one called UT bot alert. So if you see me switch it up, that's because the price has gone under the 50-week moving average. As far as Apple, come on now. You can see that Apple had a nice bounce there off the 382 candle body, candle wick, if you caught that, at 197. Came up lower high, has this skinny doji, so pretty undecided, but came back down, tagged the 236. Apple looking like one of the strongest of the Mag 7 stocks recently. But it does have this sell signal. You can see it came down, had a nice little bounce, but there you can see a doji again. So this could go up or down, but if it comes down again and breaks under this 236, then you're targeting the 100-day moving average at around 210 and the 382 at around 206. Next, let's take a look at Amazon. In Amazon, so this fib I have drawn the opposite way, and so you guys have seen how I've drawn it from the low to the high. This one, because we're still within the ranges of the previous all-time high and the low, still in between there, that's why I have it drawn from the high to the low here. And so Amazon, it has a weekly buy signal right now, but it's just kind of chopping, climbing sideways. So maybe it's getting ready to challenge that all-time high that it had way back. I think that was 2022 or something, at around 189. Peaked above it, came back below. But you can see here, this is why we have moving averages on, guys. Came right down to the 100 and jumped up. So there's ways to try to dollar cost average in, whether it's moving averages, whether it's the stochastic RSI. I've shown that in other videos, so subscribe. I'll show you different ways that I look at times to get in. There's the fibs, all that stuff. So you can try to set buy orders or go by any of these indicators. So just know, guys, indicators, none of them are completely 100%. So they're nice to have, but TA isn't everything. You still want to take a step back and just ask yourself, what's the state of the stock market right now? And what are the good and bad things going on with the stocks that I want to put money in, or the cryptos that you want to put your hard-earned money into? But of course, nothing here is financial advice. So, and you can see Amazon, we have the 50 and the 100-day moving average. We'll see if it can get above that. Again, if it does, we're looking at 189. Otherwise, it was able to have a nice bounce off the 200 at 170. If it gets down through that, then again, you're looking for deeper value at that 158 level for Amazon. Google right now, it is at the 200-day moving average. And something to note, guys, is whenever things turn bullish, and this is obviously bullish, is what trend lines do those assets like to follow, especially at its deepest value. You can see Google loves to follow the 50-day moving average. That has been great areas to get in for some nice value. Now, what is concerning is just, you guys can look at this right here. You see how extended it got? And this looks like a lot of weakness, and it looks like it possibly could get back down to the all-time high it made all the way back in early 22. So that would be an area to look out for. Right now, this fib, by the way, it's off log scale because Google came up to the 1618 extension. That's something you can do with your fibs when you draw the high to the low, take it off log, and we have the 1618 extension, and Google got right up to there for its all-time high, or almost up to there, 191 compared to 193. There's profit taking, and if it comes back down, then we're looking at 150. We'll go out to the macro view, and Google, it's still acting out this sell signal, but again, guys, it's at the 50-week moving average. So if you were dollar cost averaging in here, you believe that the market's going to turn around, hey, you're getting some deeper value. You're not buying it up here, you're buying it down here, and at the very least, you can take a look at it if you were thinking long term, that you're getting at a 15 to 19% discount within this range. So Google, important level. If it starts breaking down, then watch out. That'll be something new and different for Google. Meta looking like one of the stronger of the Mag 7 stocks. So it did turn red. It's been up in this range, and this is the 1618 extension. Keep waiting for Meta when things turn bullish, like if it was going to get to 564, possibly challenge that. But if it starts coming down, we have the 50-week at 441. Let's take a look at the daily because that'd be more applicable. And there you go. Came down to the 50-day moving average. came up, but if it starts to come down again, you can see most recently got underneath the 100-day moving average, and right now that's at 491. If it gets down to the 200, that'd be 453. So again, kind of like Google in its deepest value areas, it likes that 100 moving average, so that'd be something to watch for. Anyways, guys, I'm going to leave the video there. Thanks for watching. Again, comment below. What do you think of the state of the stock market? What do you think the Fed's going to do as far as rate cuts? And is that going to be bullish or bearish in the next year for stocks and crypto? So comment below what you think. Anyways, thanks for watching, guys. Have a wonderful Thursday. Take care.